We're going to hand it right over to Rick Santelli.
Yes, the big March jobs report hitting the wires. Non-farm payrolls, a whopping 303,000. That most estimate, and goes right along with the whisper number, which was higher than the estimates due to the strengthened ADP. 303,000, that's the juiciest number that we've had going back to 303,000 equals May of 23, right on the nose. To find a higher number, you go back to January of last year. If we look at the unemployment rate, 3.8. Now, this is a biggie because last month's 3.9 was the highest unemployment rate since Jan of 22. So it did moderate just a bit. If we look at average hourly earnings, which were up 0.1% last month, that was the lowest month-over-month change since March of 21. Let's call it 3 years. First of all, that was revised now to up 0.2, and the new number is up 0.3%, exactly as expected. Year over year, 4.1, as expected, down from 4.3. Actually, when you look at 4.1, you have to go back to June of 21. 4.1, June of 21, find a lower number. That's a really big deal when you consider what the average hourly earnings on a year-over-year basis have been doing. Average work week, 34.4 hours. That's a tenth higher than we were expecting and a tenth higher than the rearview mirror, which was 34.3. And finally, U6. That's the underemployment rate, 7.3%, and labor force participation, wow, 62.7. That is a nice jump. We were at 62.5 last month, and 62.6 was expected. So these numbers are definitely stronger than expected, and one would expect rates to be higher, and indeed they are. 470 now, 470. So we're up about 5 basis points in a 2-year, and the 10-year was right around 432 before the number. It's now 437. So it's up 5. And I can't stress enough, any yield close in 10s above 433 on a weekly basis should keep momentum to the downside in price and the upside in yield. And many were looking for the unemployment rate to move higher than that 3.9. The fact that it backed up a bit is very important. And there's been much written about the number of weekend days in February versus March. A lot of issues there. But all in all, it certainly does seem like the numbers are better than expected. And, in my opinion, probably make the Fed's decision that much more complicated.